That's interesting. A
I'm
comedy?
a comedy. Yeah.
Which country are you now in? I have to ask that.
I'm based in Jakarta though. So
Okay.
based in Indonesia. I've been stuck with here for obviously more than a year. Then haven't been traveling since just intercity. I used to go back and forth either Singapore and Hong Kong every couple of months, but never been haven't been done for a while.
Right, right. So I would recommend, as usual, my typical logistic recommendation.
Sure.
It's for the audience to pin either me or Aldi as the speaker, and you could change it to speaker view, and then you could see us.
Yep.
And I will also be sharing a few slides as my background, so you can also see that. And we will be starting in a minute as Gary is still admitting people to come in.
Sure. Sure. But how's things in Bay Area?
We are improving. In terms of the infection, the rate is dropping, and
What the hell?
then we have more people vaccinated. So we're definitely improving, and we're hoping that we will go back to normal by June.
Oh, that's
Hoping,
nice.
yeah.
Wow, that's actually fast though. Yeah, I think probably because you have your rate of vaccinations was amazing. I think you have like 1 mil,
Uh,
like have 100 mil, 2 mil guys per day,
yeah,
right? Damn.
yeah, which I thought like it's amazing as well. I mean, if you look at the infection rate, it was like, United States kind of like it's one of the top countries that got infected. But at the same time, it was also very quick, to get people vaccinated. And I have to give, kudos to a lot of those workers that work behind the scene to get it all delivered
Mm.
to the people that's most needed.
Yep, and I'll be obviously. I think you guys definitely do a very great job as well to bring the awareness, right? The educations about these vaccines, because in our
Yeah.
side, we still have some issues that some people don't want to get vaccinated, because of some people thought it's actually a conspiracy. It's not because and it's like government stuff, whatever. And then some people, because we're coming from Muslims, right? Mostly Muslim background, it's not halal, meaning that it's not allowed by the religion to take this because there's some part of those. So those kind of stuff somehow still slithering around. So that's actually one of the main issues. Logistic and infrastructure may be one of it, but it turns
Right.
out that the majority of the challenges is actually because people don't trust the vaccine.
Wow.
Just
Yeah.
you guys been doing a very good job. I know that last kind of like the time previous government been not really good at navigating those information, but today's is very very different.
Yeah. Okay. So I think we are ready to start. I know
Sure.
there are people still coming in. As always, if you have questions, feel free to drop it into the chat box and I will try to address them on your behalf. And today, I am really excited because we have Aldi Adrian Hatanto. He's a partner of Arise and he's a VP at MDI Ventures. And obviously, you guys can see from his background, he has the logo Arise, and he has MDI, and then he has Finch Capital. And I think he brings in a very interesting background. And this is also the first time we'll have somebody with a corporate venture capital background on our series. And I think this will be very interesting to tap into because you might have a very different investment focus when compared to traditional venture capital organization. So I definitely want to talk about that. But before we jump into all those details, as always, my first question is, can you share with us your background? Um, I am gonna bring you guys to the next slide where I've listed some selected MDI Ventures portfolio where Aldi has worked with. So I think these are incredible achievement because I have seen, as listed in the slide, that some portfolio has already exited, some has IPO. So I wanted to tap into your experience in Southeast Asia. And recently, you were also awarded as the only figure in Southeast Asia region who managed to get into what they call the Global Corporate Venture Powerlist Top 100. And apparently that list is an annual power list of top 100 hits from more than 2,000 global corporate venture units. And they include organizations like SoftBank, Intel, Google Ventures, Tencent Investment. So share with us your background and what has been your secret sauce to success?
Thanks, Wendy, and obviously thanks for the SSCO community. Very much a pleasure to be here, and we'll love to discuss further with everybody. There's no secret sauce. I mean, as you know, I'm still not considered a success. Obviously, there's a lot of people more success than me, but I think the key part of it, obviously, is just focusing on progressing, right? Just want to do better every day. I think it will give us some fulfillment. But if we scale back a bit, on the background side, I'm coming very much modest background. My dad was an accidental entrepreneurs because he was we had the Asian financial crisis 1998, right? And my dad was just being laid off, and since then he's been entrepreneurs in government industry by accident. And my mom is a housewife supporting the whole family. My pivotal moment is actually when my dad actually passed away when I was 18. So I just graduated from my high school. My dad passed away, and we are not coming from we could say the kind of like the background that flashy. So my dad didn't inherit me anything. He inherited me some debts, so which is giving me my debt to equity ratio, debt to asset ratio off the roof. I was just graduate from high school, and my mom obviously a housewife, so we didn't have any income and money at the time. So it's one of the kind of like the moment where really strikes me up, and obviously I was the first child back at the time, so I'm pretty much struggling with a lot of things. So back at the time is I I I really shift my mindset and a mindset to really be able to support my family, and which actually become my driver since then. How I want to be better, how I want to be bring good to the society, because I don't want other people experience what I have with my families, right? So that's become always be my driver since then. Most of it like serendipity, right? So I was working three jobs at the same time when I was in uni, which actually because of that I was met one of my first mentor, which I was doing part time in the advisory firm called Asia Strategy Advisory, and initially I was a finance graduate, so I thought, and he asked me like, hey, what kind of job do you want to do? What kind of industry do you want to be in? I was fascinated by private equity back at the time. It was like 2011 in Indo. We just have had the boom of private equity industry. We've seen a lot of billion-dollar deals. So I was very fascinated because of that, and I want to be part of it. And the answer of my what you call mentor was fascinating as well, because hey, there was actually a very bad answer. Like, well, why the hell is that? You are an investor, right? So you should look for much more long term. You should invest not only just to your money, but also to your time, because time is your most valuable asset. You cannot buy time. You cannot repeat your time. You cannot be young again. So you should make sure your time is actually well being used. Okay, what should I do then? Or if you're interested in private equity industry, you should take a look at the industry called venture capital. Back in 2011, venture capital even a job in Indo. Even until my current time, I told my family, my friends, people still don't get what I'm actually doing, right? So even until now, it's still a very strange job and role, right? So and back at the time, what the hell is actually venture capital? So I was spend my time learning that since 2011, and turns out we've been doing pretty good job. Some companies been emerged. And as we know, in the valley, been around for more than 40, 50 years, right? And other markets like China, India, Europe has been starting to boom. So it's just a matter of time happening in Indonesia as well, and Southeast Asia. So since then, I've dedicated my time to be in the industry. And until 2013, early 2014, I get connected with Finance Venture Capital, which is one of VC firm from the Valley. That want to expand to Indonesia. So I was setting up their founding office team back at the time, helping them setting up everything, and very much fortunate to work actually in pretty great companies. And for example, we were invested in a company called Bukalapak, which is one of the first unicorn in Indo. We invested at a company called Bristory, bought by Tokopedia, another unicorn in India as well. We invested at a company called Mocha, which is bought by Gojek, one of the unicorns in India as well. So we've been pretty good, somehow pretty good in doing that stuff until I was being called by Bank Mandiri back at the time, which is one of the largest bank, like Citibank of Indonesia, and they want to set up their own venture arm. So that's how I probably started exposing with corporate venture capital. And back at the time, the reason is that the simple one, it took the job because my mom obviously wants me to in a very stable job. He's finding very hard to really understand what I'm not doing, so he wants want to know, hey, how can you work in a very much regular job? So I could just tell him, hey, I'm actually working in a bank, and it's actually a state-owned bank, right? So it's actually very secure. I'm like a civil servant, so you could tell your friends, and I'm working civil servant, but I'm actually working in venture capital side. So it's a win-win for all of us. So I took the job because of that. Simply, just want to make my own prop, at least, right? And then I'm working with on the capital. We've been pretty good investing at that time as well. We invested all the fintech companies back at time was in the early rise. It was 2017, sorry, 16, 17, and until 2 years after that, they have different directions, and then we decided to part ways because they want to go other direction, which is good. Not for me. So decided to after that I got a call from MDI, which that interestingly what makes MDI different was they were the first corporate venture arm in Indo. So they started off in 2014, started really fully operate at 2015, 18, then been since then been doing pretty well. But they realized that we cannot just become a pure corporate VC. So they asked me, hey, can you join and help me rejuvenate the team, because we want to do something different, but I don't know what. So please figure out. So that's actually how I get the job. Okay, we'll figure something out, right? So I coming in, which we saw that they've been doing pretty well. They have a couple exits as well, some the big mentions, right? And we've been pretty good investment. Like PFAS is the first Indonesian company going to YC, so we were the first investor there. And the company already valued at $150 million. They just closed another big round. Been fun making investment on that part, which we realized that, hey, we actually did have pretty good job in terms of the performance compared to the corporate PC. The corporate PC usually driving by kind of like the so-called like synergy, right? So if you could be able to bring value to the group or the parent companies in terms of commercial value, whether adding more revenues, efficiency for reducing the cost, that's usually the main criteria. But MDI has actually have pretty good job as well in terms of return. So, and then at that time, surprisingly, we have some interest from other investors that, hey, I want to do my own corporate VC arm like you guys, or they actually see, hey, you have a pretty good track record in terms of returns. I want to invest your LPs, right? So since then, I propose, hey, why don't we become a so-called multi-stage VC funds, right? So we want to cover everything end to end. We have multiple investors lining up, want to invest on our fund. And we could just scale the business, right? Instead of just managing Telkom's or like the corporate money, why don't we just manage other people's money as well? So since then, which I joined 2018, prepare all the material. So we set up our subsidiary in Singapore as a fund manager arm. We have the license as well by AMAS. It's like SEC of Singapore. And then after that, we have our first fund with our sister company called Telkom Cell. So we help them create their own VC fund, but with LPGP structures managed by us. And then we set up our Series A fund by 2019, which we collaborate with Kookmin Bank from Korea. Been very active as well on that part. So they become anchor LP on that part. And last year, we set up our research fund, which is Arise, and I was very much leading that particular part personally, and we've been managing that 5 fund. And at that time, we would because we've been managed to raising pretty good fund. Telkom quite formal. Hey, you guys. Other people even want to put your money. I want to put more money on you guys, right? So they decided to put $500 million investment to us as our second fund. So currently we manage around $850 million across five active funds, which is primarily covering from seed, CZ, CSB, and CC, PIPO and beyond. So that way we've been operating with that particular structures across. We have 3 offices now in Indo. We set up Singapore office in 2019, and also a US office at the same year. And also we have some excellent offices in Netherlands and also in Korea through our partners. And since then we've been operating through as the so-called multi-stage VC fund, primarily covering global markets, especially, but still in focusing on companies that we believe could bring it to Indonesia. So even company in the Valley, we have some of it. We've now invested in a company called Observate, which is the cybersecurity companies we bring into Indo, and eventually they're being bought by Proofpoint in kind of like is a by Proofpoint, which is not a statistic company, and now some of the others as well. So since then, that's probably how we've been operating, and we'll see how it goes.
Yeah, you have given me so much information, and which I wanted to break it down for our audience. And
apology for being too long though.
No, but I think it's so useful because you have touched on corporate venture and how you look at synergy, not just focusing on financial return, but you have also touched on where you are now you have launched Arise, and you're looking into Southeast Asia from like different offices. And I think for a lot of the audiences, they are located in different countries across Southeast Asia. They could be in Hong Kong, they could be in Thailand, they could be in Singapore. So for Arise specifically, like how do you look to identify the startups that you want to invest into, that you're interested in? And for a lot of the entrepreneurs, how do they get to know you? How, like what criteria do you need to see for them to fit into your investment focus?
Right. That's a very interesting question. So it was coming back to 2019. So back at the time, we started to realize, hey, we should start it up a multi-stage VC fund. Telkom's money focus more on the bigger round, like Series B, Series C, and above, where I think check size $15 to $30 million, and working with companies that already have minimum like 10 to $20 million revenues. That would be much more beneficial for them to work with. So okay, we already have the top guys, which is the MDI Mean Fund, and that's going down, right? And then we start to set up a Series A fund, which is primarily early stage one, focusing on check size around like 3 million to 5 million for Series A round, with round size on 10 to 15 mil. And we're probably working for companies that are already reaching product market fit, and we want to escalate that along the way. And we started to realize that initially we want to stop there because we thought that, hey, seed might not be in a stage that's too risky, for people who will see. But we realized that the seed investment in Indonesia or Southeast Asia specifically been quite dry up based on our research. So in the past couple of years, the number of investment is actually increasing. So the value of investment CAGR wise grow like 50-70% year on year, sometimes triple digit. But in terms of the number of companies being invested in this region, been relatively quite stagnant. So on average, relatively every year is only around 70 to 80 companies. We haven't really break into 100 companies being funded in seed and below stage in Indonesia specifically, and in these particular regions. So we're kind of wondering, hey, well, what's happened, right? So we started to talk with all the guys. We have to talk with some accelerator program. We talk with some of the founders as well. We talk some of the companies in the early days, and turns out that I think most of the VCs that initially started off, most of the VCs started off as small funds, right? Which is primarily the first wave coming in 2019. Back at the time, it was they raised like $10-15 million median fund, so they have that particular fund. But obviously, as a fund manager, you want to have your fund bigger, right? So I could be able to scale my business. I'd be able to have much more management fee and be able to have managing bigger funds. So since then, most of those first wave of VCs been raising a bigger fund. Now most of them already more than $200 million AUM fund, which obviously investing in seed wouldn't be something that kind of like the efficient, right? Because otherwise, if I read checks in this particular region, seed usually will be the round size will be ranging around 500K to a mil. Sometimes we could see some extension like 2-3 mil, but that could be the max. Minimum usually the sweet spot will be 500K to 1 mil. So imagine if you're a $200 million fund, how can you spend your money at the right time, right? So second of all, they start to realize that back at the time,
I think you said that a lot of the entrepreneurs would be very happy because you have so much money that they'll say, hey, come and invest into me.
Exactly. Back at the time, they have a lot of money, right? Available for that particular stages. But now, unfortunately, despite we have bigger money coming in this region, those money is actually sucked up either to the unicorns. So unicorns raising billions of dollars, right? Or $100 million, or the second of all, it's more like the growth stage investment, because the company goes that, right? So actually in this region, back at the time when we realized that, hey, raising 500K to a mil is much harder than raising 5 million, even $100 million in this particular region, because there's no much fun focusing on that part. And the second of all, but we realized there's an opportunity where the type of founders, the quality is very different. We call it third wave of founders. So when I started off in 2013, most of the founders is we call it like first generation of founders. So founders that local guys born and raised in Indo, usually don't have international background, very local, never done startup, never done entrepreneurship, some of creating billion-dollar companies, right? Or two unicorns like that. So very modest background, creating Tokopedia and Bukalapak, which is like Alibaba and Amazon of Indo. And we have like second generation of founders, typical Indonesian guys born and raised in Indo, but have international background, coming from Ivy Leagues, right? Or have MBB background, McKinsey, BCG, Benco, or coming from investment banks, Goldman Sachs, JP Morgan, and etc. But never done startups anyway, as well, never done tech companies, never done entrepreneurship, somehow creating billion-dollar companies, right? So that's, we have Traveloka and Gojek, which is like the Expedia and Uber of Indo. But since then, we started to realize that we have actually the new generation of founders. We call it like third wave of founders, meaning that it's the Indonesian guys born and raised in Indo. Doesn't has to have experience abroad or locally, either way. Doesn't have to coming from those flashy background, but they have experience to validate, grow, and scale tech companies as executives. So this unique, we already have like 6 unicorns at the moment. So they're probably, most of the team already know how to grow and scale tech companies in this particular region the right way. Because localization obviously is very crucial, right? And the VP level, chief level of company started off spinning off. They are resigned and started out on companies, right? And we talk with them. It's very different the way they think, the way they execute. So we realize, hey, there's actually immense opportunity based on our data. That's currently we have almost 300 companies, actually more than 500 companies actually being founded by these ex workers or ex tech or startups professionals, right? So, and the way they scale is very fast. They will initially, for example, they raise money in every 18 months, 24 months. Now they be able to raise money like a year, even sometimes 6 months. So the executions and the scale is very different. So we see that it's actually an opportunity to invest very early, right? That's why we realized that, hey, I make a deal with MBA. Hey, why don't you give me like $1-2 million of the we already make some exits, right? So hey, this is like another fund as well. Why do you give me like 1-2 mil? Let me play around in investing in this type of companies, right? So one of the first investment that we did, I didn't mention that part, is one company called OI. Which we've been they're doing kind of like plate model in Indo. They founded by ex Gojek. He was started off GoFood, which is like the Uber Eats of Indo, and he left and he once started out this company, and we worked with them very early, and we are shaping up their ID. Initially, they want to be a WhatsApp, which is, hey man, it's ridiculous. They cannot compete with WhatsApp, and we give them some insight, which is something that we realized that even these great founders, there's a so-called asymmetric information where they don't know what kind of things that they want to build. they are not being exposed with this type of information, right? Which we have. So we want to work with them very early and be able to help them navigate the product market fit, right? And then after that, we realize, hey, there's a lot of people using payments in your platform, and why don't you create the payment part? And we realize, hey, there's a lot of API being required for the payment, bulk disbursement, checking account, etc. Why don't you get more API from the banks, right? And then you'll be able to sort it out, right? And since then, the company doing very fast, and we led their seed round, and then the company been doing extremely well. They currently have like more than $3 billion GTV. We basically growing like almost 50 times last year. So we invested a year ago, 2019, and they currently just closing a significant round with one of the top global investors, making them a $100 million company at the moment. Back at time we invest not even 10. So we already seen like 10x returns since then.
Can I pause you on that? Because you talk about where you have insights and you have data that you can actually provide support or guidance to the entrepreneurs.
Yep.
I think this is something that the entrepreneurs would find extremely helpful. It's also what differentiates yourself from the rest of the other venture capital firm. And do you think that the fact that you have this data is because you have this corporate venture background that provides that kind of platform for this kind of data? And does this kind of data actually help a lot more on the tech entrepreneurs, or does it apply to like specific sectors?
So That's an interesting question. So from our standpoint, we realized that because we are relatively operating in a global office, right? So we have office in Singapore, office in the US, we have partners in Korea, we have partner in Netherlands, which is covering primarily Europe, and in this particular region, most of the companies that successful relatively is a time machine theory, right? So that's actually the advantage of investing in these emerging markets, because most of the companies that are raising money, big round, even all of unicorn are inspired by the big guys, the big tech in the US. For example, we have like Tokopedia and Bukalapak is Amazon of Indo, Alibaba of Indo. So we have Gojek and Grab, which is Uber or Fleet of Indo and South Asia regions. We have Traveloka, which is the Expedia and Booking.com of these regions. Right, we are currently have also OVO, which is like N Financials or PayPal of these regions, right? So we see that more, even because in the end, these companies will be able will raise bigger money, and the way if you want to raise bigger money, mostly will be coming from the global investors, right? Primarily coming from the US, China, or from the Europe. And as you know, VC is actually not that smart, to be very upfront. We are very simple-minded. And even, for example, our to give you a backstory, for example, Tokopedia, we did they are the first company have $100 million round back in 2014, and it was backed by Softbank. And backstory back at the time, it was initially actually just an $8 million round. They were barely very small, but somehow the deal comes to Masayoshi-san, which is Softbank, right? So Softbank, when he see the deal, and his quote, and I quote, is very decision making, very simple. Hey, this is like Alibaba of Indo. We should invest significant amount of money. I regret because back at the time I only invest $20 million to Alibaba. Imagine if I invest $100 million, right? How much would you want to invest in Tokopedia? Oh, it's $1 million. Oh, that's actually super small. Why don't we invest $100 million, right? So that's my point is, most of the companies actually that, and we've been have the luxury where I have all my colleagues in my other offices that give me more information. It's like, hey, this is what's happening in the US, this is what's happening in Europe. This model works, and then after that, I will digest and also kind of like see the direct between the lines and which one that will be works in this particular market based on the problems that we have, and whether the solutions that they actually offer partially be able to work in this region, so we could that particular angle side. So that, and as mentioned, even these relatively experienced tech professional founders doesn't have those kind of information set, and most of the VCs, the way they do it was primarily I was still sourcing, so-called, meaning that I have more awareness. People come to me, and then I will review their pitch, and then I make the decision yes and no. Well, from our side, we kind of rolling up our sleeve a bit. We built our thesis. We call it like backward investment thesis. We built our thesis. So what kind of companies what kind of thesis or subsector business model that we like to invest. We built the unique value proposition that we look. And then we look for the founders and even existing companies that we have that want to build those kind of companies. And then when we do the pitch, when we do the pitching session, it's a very unique, meaning that actually most of the time I'm the one who do the pitching, because hey, have you talked about this thing? Because when they mention certain stuff, hey, I started to have in my mind, hey, they actually could do this A stuff. Why don't they do B stuff? And then starting asking, hey, why? Hey, what do you think about this approach? What do you think about this model? Have you considered about doing this thing? So the discussion is very much two ways instead of the founders pitching to me. So that there was primarily like 2-3 companies we did it. First is Oi, $100 million company now. Another company called Sinbad is a B2B commerce. They do a similar like Udaan in India, which is the fastest unicorn in India. Same as well, they already when we invested with a seed round, now they already growing like 10x. They already raised a Series A now in 6 months. We also did a company called Aruna, which is a fishery industry. It's similar to, we have a company called Meikai in India, but focusing on agriculture. They're focusing on fishery. So they're just closing another big round as well. It's $100 million round now. $100 million valuation as well. They have like 7x growth in year on year. So those models been work for us, and then I pitched to my management, hey, why don't we just set up our seed fund, so make it more official. So that's how Arise coming out. So that's how we probably operate in terms of that way.
It's really interesting because you have talked about how you give suggestion to entrepreneurs how they should kind of like revisit their own business model. But I remember in one of your interview that you have mentioned that you are looking for startups with high margin and liquidity. low fixed costs, and low people-centric. And it also should have an asset-light model. So can you, it's kind of, I feel like it's very rhymes back to what you were describing, but I think it will be helpful for the audience for you to shed more lights on this, because for a lot of the entrepreneurs out there, what should they show in their pitch deck? Like, for example, to you to demonstrate that they've already achieved these criteria that you set out. I mean, it's a lot of criteria: high margin, liquidity, low fixed costs, low people-centric, and asset-light model.
Right.
Is that difficult to achieve? I mean, you're setting out a lot of criteria.
So the thanks for asking that, though. Obviously, not everybody like to digest that, but the inspiration was coming from. So we realized that even not necessarily VC, but other investment arm firm, usually they have like criteria. For example, like the KKR have their own 10 commandments, right? So they have like 10 criteria of companies that we look, and we realized that most of the investors we talk with them, they are looking for a sector, right? I want to invest in fintech, I want to invest in e-commerce, right? I want to invest in consumer internet, ride hailing, and etc., IoT, cybersecurity, whatever. Right? But we started to realize that we even every sector is very different, as you know, right? There's a sector, subsector, multiple breakdown of that and sector, and you cannot generalize that. Hey, so for example, like the IoT is interesting. Yeah, generally yes, but not every IoT business is interesting, as we know, right? Or for example, hey, for example, like fintech is obviously changing the world. Fintech is eating software, is eating finance, right? But not fintech companies is interesting, as we know. So we realized that instead of investing in the sector, betting in the sector, we want to invest in characteristics. So because these companies, regardless their sectors, they usually will resemble certain characteristics, right? And these during pandemic, we realized that there's a lot of characteristics that being getting more obvious that these characteristics really matter. And that's why we finally, again, this is also a working process, for very upfront. So hopefully we will be able to shed light some of it along the way. But so far we kind of like resemble into that particular criteria, which primarily become one of the assessment where we are trying to assess the thesis, right? Like, hey, whether this thesis actually makes sense, whether this type of solution tackling this particular problem actually be able to resemble this characteristic of companies, right? So first mention is so the general theme of it is, especially in this particular region, a lot of companies, as you know, startup is very general, right? So the definition of startup is, some people say it's early stage companies, some people say companies, but from our definition, which is similar to YC, it's just a company that designed to grow fast, right? So we just want to invest in that kind of companies. But sometimes the type of companies is the different with thesis, they need to be able to show some insights, meaning that even they are in the relatively kind of conventional business, but they actually do some innovation in terms of the process, so they actually do better. So that's why we are expecting, for example, on the high margin side, want to see, for example, even if the industry, for example, we invested in the Aruna, which is like e-fishery, like fishery business, right? It's a trading fishery business, which is a relatively small margin. But when we assess, hey, can they demonstrate whether they could have a relatively higher margin compared to their conventional or incumbent peers, and how they do it to improve it, how they could make a better margin, or for example, how they could highlight that have relatively what you call it, the lower people-centric. What we mean that, because the problem with COVID, we most of people are at the house, so some of the businesses that highly people-centric, meaning that you need people really on the ground to really operate
on the ground.
physically on the ground, whether, for example, like ride hailing and retail business, right? It's very much impacted. So we want to show companies that we invest have a relative, doesn't mean that purely, especially in this particular region where we still be able to be open, meaning that you need to have people on the ground, online to offline is required, but we want to show that the technology allow that exposure of people centric will be minimized, right? So we are looking for companies that even if there's another pandemic, they still will be able to operate. That's why we see that will be very crucial. Obviously, our fixed costs, we want to ensure that companies that invest because of adoption of technology, be able to have lower requirement of fixed costs, meaning that instead of I have to spend significant amount of capex, the payback period may require me like 18 months, 24 months. With these innovations that they have, they will reduce it to be very small fractions of it, so you'll be able to be scaled relatively fast, right? And the last part, regarding the asset light model is primarily we improve it to, we call it more like a sales to capital ratio companies, meaning that most of the companies that we realize in this particular region, especially we are reflecting back to all the big techs, right? Facebook, Amazon, Apple, Naspers, and Google. They have relatively so-called like very efficient sales to capital ratio. I mean that meaning that the amount of the valuation capital ratio, meaning capital that they raise in compare to their valuations is very high, meaning that for example, Google, when they IPO at almost $100 million, they only raise less than only less than a couple $100 million, right? So meaning that with that couple $100 million, they will be able to generate shareholder values more than almost 150, 60 times, right? While unfortunately, most of the companies we see in Indo not doing that particular part, so they raise money like their valuations like $8 billion, but they actually raise money around $5 billion, $6 billion, right? Meaning that the shareholder value, the shareholder value creation is very limited being created, right? So they are not really efficient in managing the capital. So we're looking for companies that could raise money as small as possible, so they will be able to maintain the dilution, but they will be able to demonstrate that the money that they use actually much more efficient. For example, we invested in a company called Si Cepat, I haven't put in the list. It's a last mile delivery companies in Indo, and they're growing extremely fast. They currently have almost $200 million revenue, already EBITDA positive. But before we invest, they only raised like $50 million. Even the previous year, they only raised $30 million, meaning that with only $30 million, they'll be able to generate almost $100 million revenues, right? And they barely spend all of it. They only spend like 15 or 20. So technically, with that, they already be able to have 10 times productivity with that particular capital. Because you want to grow, you need to buy growth, right?
So practically, it's an efficient use of capital.
Capital, exactly. So we are aiming for that part. So all the companies that we are looking, we are not encouraging them to offer capitalize themselves, because even we don't want to be too greedy, because some people kind of like misjudge, like, hey, if I raise big money, then I'm success, right? Hey, hold on, man. Wait a second. It's not necessarily that. It's actually you actually just started after you get the money. What you want to do with the money, right? I mean, most of the time when we talk, 8 out of 10, they don't know what they want to use with the money, which is like, what the hell? Like, then why you raise so much money, right? Also, I have back of it, right? So we thought, hey, don't do that. So when we invest, hey, let's just raise proper money. If you only need 10 million, let's just do 10 million. If you only need 20 million, let's just do 20 million. That way the founders will be more responsible. They will have minimized dilution. And obviously we will have to really optimize their returns, because some of the investment that we made back then with that typical of fundraising strategy, we are being eaten out by the dilutions. We thought that, hey, the company growing 10x, but turns out every round they are diluting more than 30% of the companies, which turns out that net I'll only be able to increase my investment value only around 3 times, right? It's not obviously not the best case. That's why we want to look for those type of company as well that really be able to be capital efficient when in regards to managing the money that there is.
You mentioned such a critical point, because I think some people might think that the more money they raise, the better, because then they have more flexibility. But
Right.
I would definitely agree with you that is not the case. It's about raising the right amount of money and at the right timing. And
That's
so
true.
that you know the correct, or wouldn't say correct, the appropriate business development or business growth that you should deploy on that particular juncture. I have a question from the audience, and and the question is it much easier for startups to raise money in Silicon Valley than in Asia? And I think that applies to startup in Asia. So what's your view on that?
Yes and no though. So the good part, in the valley, the good part obviously, the what we saw is also some of the companies that we have there, the people the market is more mature, right? Meaning that we have thousands of venture capitalists, you have hundreds of incubators, you already have like hundreds of angel investors actively investing. We don't have that luxury in these particular regions, right? But in retrospect, the number of despite we have limitation on that supply side of capital, but the number of companies being founded is also still significantly lower, right? And if you are trying to even drill down, which also same case in the valley, that's why there's a power law, right? Meaning that top, for example, in the US, top like the Pareto, like 8%, 80% of the venture or VC returns actually generated by top percentile of the VCs, and even usually even top 10%, the one who actually generating the 80% of the returns. Meaning that deal, even despite you have a significant amount of supply, but good deals still very limited. Great companies still very limited, and those great companies only goes to the top percentile VCs. Most of it, not everybody, most of it. But the same goes to our side as well. So if you're talking about the ratio standpoint, in the end, despite the supply of capital is limited, but the number of companies that being generated in this region is limited. Hence, the number of great companies being produced is also very limited. Right? So that's why we thought we realized that, hey, actually the difficulty is relatively similar. If you it's actually easier only in the case where you are the typical founders that like serial entrepreneurs already doing multiple times. So you have to have easier money. But if you are expect a ceteris paribus, so far what we saw is relatively the same. The difficulties is actually more on the investor side, not from the founder, from my standpoint, because from the investor side, we need to compete with thousands of VCs in the US. So it's very tricky when we invest. We currently have around 10 companies. We realize that we cannot just do the regular way, because otherwise if you guys just do a conventional way of VCs, building the brand and being present, and people are coming to us, they won't happen. So the way we do it, we actually just list down. So even for example, we have in an event we call Top Startup Summit. Like we do 2 sectors now: health tech, healthcare, and media. So we list down these. We interview these dozens of companies in top, we believe, in their particular segment, and then we are drill down which companies that we thought that is the top player in that particular segment, and we approach them. Hey, we like what you guys doing. We see that the value of what you guys doing, and we could collaborate and help them with the corporate that waking us. Or how do you want to come to Indonesia and I want to invest with you? That's kind of strategy we have in the US. We saw back on the questions. We think that in terms of fundraising for startups is from the ratio standpoint not that different, but from the investor standpoint, obviously it's actually much harder to invest in the US rather than in this region, because the competition within the investors are relatively much more limited.
Yeah, absolutely. I have to agree with you on that. It's a yes and no. It depends on the investor, whether they have the knowledge about the region, and whether they have the talent or the resources to actually support your organization. I mean, if you do get a funding from a Silicon Valley firm, the point is they're so far away. Are they able to help you, navigate the region? As what Aldi was saying. Aldi, you were saying, a lot of things is about like helping them grow really fast. One of the terminologies is blitz scale, and I think I want to talk about that. It's let me bring you to the slide that talks about blitz scaling, because I think it's so important to have an investor that can actually partner together with the entrepreneur to really grow the startup really fast. And I realized that you have mentioned a lot of times, in our today's conversation about how important it's for the startup to grow really fast. And I want to bring this to blitz scaling, because there's a book written by Reid Hoffman and Chris Yeh, and it's about blitz scaling. And I quote him. He said that blitz scaling is what you do when you need to grow really, really quickly. It's the science and art of rapidly building out a company to serve a large and usually global market, with the goal of becoming the first mover at scale. And it's interesting because you have so much knowledge about Indonesia, and Indonesia, among the Southeast Asia countries, is one of the largest market. And so And I know that MDI has that kind of like a ability to bring the startups into the Indonesian market. So I guess a few questions here.
Yeah.
First of all, it's your concept of blitz scaling the same as what Reid Hoffman has been saying? And secondly, is tapping into the Indonesian market one way of growing really fast?
Right. That's a very interesting question. So first of all, we not frankly, it's not exactly the bit scaling of Red Hormone. We just inspired by the terms and also the idea, because even if you have go through the book, that technically we thought that is actually an approach, right? How to blitz scale, right? So it's more of like the thesis on how, and the mindset of how we will be able to grow really really fast, right? So we realized that, and he mentioned a multiple case studies in the likes of like Google, Amazon, and etc., which primarily we realized that in this particular region is the market is relatively very unique and obviously unpenetrated, and in certain level of relatively very costly as well to scale. What I mean by that, because most of, for example, we have our mobile penetration is around 60-70%. But if you really want to deep dive on the quality of the penetrations, it's barely 20-30%, because we are very much, there's a disparity of quality of network, for example, in a disparity of even knowledge and awareness between the metro city or tier one city to like second, third, fourth tier cities, right? So that way, if you want to really be able to tap into the total 150 million population in this particular region, it requires a lot of resources, not only just the money, but time and effort, because you not only just selling your product, but you also need to educate the product as well, because most of the information is very much disparity, right? So that's why we thought that, hey, why don't we be able to help you? And you may not, for example, and they need to be able to scale in Uber model, where city by city. For example, you do Eco Road in the capital city of Jakarta. It's different when you go to like other city like Bandung or other type of secondary cities, right? So we realized that, and especially the farther you are from the tier one city, the more offline requirements needed to really tap in, because they are not really connected much to the internet or digital world, right? That's why we thought that, hey, what if you really want to really grab in the whole market, especially you want to really have strengthen your presence, why don't we just work with us? Because we have multiple corporates that already have significant amount of presence, significant amount of resources and network in those particular region across archipelago, which obviously will be able to allow you to be more efficient, obviously be able to grow much faster. So that way, that's the idea we have. It's just probably what we're trying to do with some of the companies that we have. For example, like Cepat, as I mentioned to you, for example, the last mile delivery companies. So in Telkom, we have a lot of buildings that being unused because it's part of their kind of like telco hub for the tower. And then it's we have like, I think we have like more than 100,000, more than almost like couple 100,000 square meters being unused across archipelagos, right? So we realized, hey, why don't just the Cepat create a hub, because they already have like this demand from last mile delivery. Why don't you create a hub for for mid-mile delivery or even last mile delivery pickup for you, and then we could share some revenues, right? That way you don't need to spend that much money acquiring the part. You just have to leverage our network, which already in prime locations will give you pretty good price as well, because at the moment I don't use it anyway, so I don't get any money. If you could utilize it, obviously good for me. So those kind of model that we are trying to really help the companies, because for example, even like Telkomsel, we have like 150 million users, telco users that have monogamous relationship with us every month, paying their airtime. So that are all the things that we're also trying to help. So what we mean by the blitz scaling company, I think it's obviously the idea. We want to have the company grow really really fast, but the approach that we have, it's meaning that not only just we help them with some of the playbook of other great companies to really grow fast, but we also have other resources that they could tap in, which is probably multiple corporates that backing us throughout the fund.
That's really, really helpful to know about. One interesting thing is about the Southeast Asia market, because I probably want to bring that out.
Sure.
It's about this a really fast growing VC market, and you talk about that as well. And I know you're based out of Indonesia. For a lot of the entrepreneurs are based out of the region that could be based in other countries as well. So what is the best way for you to work with them?
Right. So that's what you call it, so we're trying to work with them. I think we have two ways, right? Meaning that, you know, the conventional ways, you know, just primarily if we're very much reachable anywhere, so anyone that pitch to us giving a deck and etc. Usually will primarily you know, be able to reach out, review the deck, and then primarily we'll get back to them if we're interested, do the pitch and etc. Right? But usually there's another way as well that will be much more efficient. It's primarily obviously similar to what happened in the US. It's primarily through referral. So usually most of the startups that getting funded is primarily they are getting from the referral deal instead of like, you know, someone that coming in directly because it's being filtered out, right? But the third part that we realized that not everybody somehow, I'm not sure about it's similar to the US and the Valley, but because it's been so much mature, but in this region we're kind of like an exclusive community, which is not something that we're proud of, right? Because even for example, like some of those, what we mean by this exclusive community, because even for example some of those aspiring founders from top executives from these top companies like even like Google, Facebook, or like Gojek and etc. They're not necessarily connected with the venture capital industry. So they don't know who's the guys, despite actually just, you know, less than 100 people of those in this market, right? In this region primarily. So you could just check it out in LinkedIn. You could find like, you know, by yourself, but not everybody being connected, right? So we started to trying to democratize that by you know, we are trying to be the one who look for the guys. So we're trying to be more proactive, you know, building our network, which is, for example, with our founders community. We are trying to even sometimes cold email, cold call some of the potential aspiring founders, trying to build the relationship even before they are starting out a company. So we currently are building a database of multiple aspiring founders that we are tracking very closely. So that way, when they are started off to want to set up their own companies, they will go to us, because simply doesn't mean that we are the best. Simply they don't know anyone else, so they just go to us. Right? We are one of the only guys that want to be more proactive on doing that, and so far been doing pretty good on our side. And I think we just are trying to think about how to really replicate that. But in the end, not I think in terms of the fast growing part, it's I think it's primarily because also the trend is shifting, right? Because for example, when in the early 2000 when the emerging market start become, you know, a thing, you know, the BRIC, right? Brazil, Russia, India, China. Some people say the other I is Indonesia. People start to go out of the Silicon Valleys, right? They're looking for another Silicon Valley, whether it's actually in China, which obviously the next boom coming in the early 2000s, and then now people go to Latin America, like Brazil and etc., and also India, right? So the past the first 10 years of you know 2000s is like China, 2010 and above, primarily the Latin America or Brazil. Now we start to see more and more coming in. So people will think, hey, okay, what's next? I may miss China, I may miss India. What else that I shouldn't miss? So people started to go here, especially since that most of the big fund, you know, like Vision Fund, you know, type of big billion-dollar fund like you know, private equity like KKR and etc. You know, top Silicon Valley-based VC like Sequoia, Lightspeed, Axel Partners, and also some of the top VC, top, you know, growth stage investors like Process, Tiger Global also started to invest heavily in this region. So I think that's why one of the reasons why the market hype, and also I think we start to see you know, some of the unicorn being pop up, meaning that yesterday Grab, which is one of the biggest unicorn at the moment in this region, just announced the merger with Altimeter, right, for a SPAC merger in the US. So they were primarily
and they're going
listed.
for IPO.
They're going for an IPO at $40 billion valuation, which is one of the largest SPAC transaction ever happened, and obviously the largest companies in these regions, right? And we also seeing like some of the other unicorns are preparing for either SPAC or going IPO as well within this year or next year. So it's starting to put, and we also have our first and largest Southeast Asian company listed in the US, a company called C Group, which is being dubbed
Right.
as the Amazon for emerging markets, because this guy like killing it. Like literally, they are number one in LATAM, number one in Southeast Asia, number one in
Wow.
other multiple other regions at the moment as e-commerce, and they are going in crazily fast. And they have similar model like Amazon, where they have a cash cow business, but it's not an AWS or like cloud business, but it's a gaming business called Garena, which is highly profitable, fast growing, and which primarily they use that excess of capital to fund their other high growth businesses like e-commerce and also Vendak as well. So that model been doing super well with them. The company currently being valued at $120 billion, making them the most valuable company in Southeast Asia region, right? And last year they grow like 10x in market cap. So they already put us on the map, having Grab and other companies with that kind of magnitude obviously put us on the map further. So we see that the current numbers will still be able to grow immensely fast. I think we just touched the tip of the iceberg. So that's why we've been very excited for what coming in the next couple of years.
Yeah, I'm totally not surprised, because if you look at it, the Southeast Asia has like 360 million internet users, and then 90% of that had access the web, on their phone for more than 4 hours per day. And so you think about in terms of the population size across the region, that's bigger than the United States. So when you mention about all these unicorn, I can see that there's more to come, definitely. I have another question from the audience, and it says, how can startup founders seek investor attention to raise capital? And I think we briefly talked about that, that 5 criteria that you mentioned, low people-centric, asset-light model, liquidity, high margin. I think if you can demonstrate one of those criteria that you have achieved, that could already attract some of the investor attention, right? Aldi, do you have any other suggestions? We are coming to the end of our event, so maybe like you can give a couple of suggestions for the audience here.
Sure. So that particular kind of like the criteria, frankly, is very candid to us. Some of the VC might not agree with me, which is fine. Everybody have their own opinions, right? But if you're thinking about the general idea of how people or VCs assess the companies, right? Usually they want to hear in general like three parts, right? It's and usually in order, which is primarily a startup hypothesis or startup ideas. So they look primarily the problems, obviously the solutions, and what's very crucial and tricky is the insights. And let me break it down a bit, right? So problems, like they're looking for problems that need to be solved really quickly. The problems that growing really fast, like because for example like COVID, there's a change of environment, change of regulations, which obviously create frictions, another problem as well. So trying to look for those type of problems, right? Problem that millions of people are feeling it, live and breathe with it, or problems that they encounter very frequent, in daily basis, even in hourly basis. So they are very have to face this thing multiple times, even a day. Problems that growing, for example, like CAGR of the market of these problems are 20%, 30%, and also using problems that have certain shift of behavior like COVID, certain shift of regulations, so people will have to cope with these new regulations. So those kind of type of problems that usually look, and generally other theses look, and you could translate it to multiple stuff. For example, like white ride hailing, despite the economics, right? But why ride hailing is such a sexy problem? Because it's simple. People need to commute every day, and obviously taking a taxi is not the best efficient way to do a hailing. You need to put your hand on the street, and then know whether the price is how much it go up, and etc. And don't know whether when they will come. But with this, you have more certainty and more in terms of the time, quality, and also pricing. So people have to face it minimum 2 times every day when they go out and go back to their home, or in the middle they go with something else as well. So that's why people like this type of problem, because they counter multiple times. Or like problems like in healthcare, where, as we know, one of the only 2 costs that never goes down is in healthcare. Is always go up, and obviously we have a lot of problems in terms of supply of doctors and etc. Because producing doctors is not like producing any other graduates, right? It's taking very long time, especially we're talking about specialists, right? So how we could bridge this particular gap, meaning that enhance the quality and productivity of these doctors, right? Or for example, like COVID as being mentioned, right? Initially, people can go to schools. Now they cannot go to schools, or people can have a meeting. Now they cannot go to meetings. So that's why Zoom and multiple other kind of like edutech companies been emerging for this particular online conference, online learning. So that's why those kind of markets is will be very crucial, right? And the second part is obviously the solutions, which the suggestion is very simple. Never start from the solution, because usually it is if you're coming from the solutions, usually people are coming in, for example, like engineering, right? I want to use like blockchain. Okay, what kind of problem you want to solve with blockchain? I don't know, anything that related to blockchain, I want to do it. It's a very wrong way to say it, right? And usually it become a so-called like SISP, meaning a solutions in search of a problem. So they have a solution that really looking for a problem. They don't care what the problem is, as long as solution it is. And usually it's not really fit. So the only way to do it is always start with the problem and think about the solutions. Then don't do the other way around. Otherwise, you will probably stuck and not be able to reach product market fit, despite how good you are in the execution part, right? And the
Yeah,
last is obvious.
absolutely.
And last part,
But
obviously, insights, right? Which is primarily in terms of insights, is primarily we are looking in what are the things that you have that other people have, like why you are the best one to solve this particular problem in this particular solutions, right? Use primarily we saw usually from the founder's background, which obviously the weakest one, right? You say, for example, I'm a product manager in Google. There's a dozen people, hundreds of people, thousands of people are product manager of Google, right? So it's not an advantage unless you are coming from a PhD background and you have like this type of a pattern that only you have. Then we talk about founders insights, right? Or you actually have connected with some of the people that really be able to become an advantage, right? For example, we invest in a company called Sinbad, so they're partnered with the largest distributor companies, which bring them the best supply compared to the others, right? Or primarily we're looking for an advantage that primarily or insights primarily, that information that people doesn't know, right? That this particular problem is happening. So that's primarily that we also look as well, right? So those are primarily kind of like the three parts that we look, problem, solutions, and insights. It seems very easy, but obviously not everybody could really execute it well. But the focus is primarily is we could be able to nail that based on that particular part, especially on the problem part, because everybody get it that part wrong most of the time, because they go with the insights first or the solutions first. They're not really focused on the problem. So that's if you could be able to really articulate this particular information to the VCs, then what you call it, yeah, you are primarily most of these definitely will have to talk further with you and explore the opportunity to invest.
absolutely. I think I love how, Aldi, you're sharing all these pragmatic suggestions and recommendations, which is so different to a lot of other VCs. And I think to summarize what you have just said, basically it's about, if you are providing your pitch deck to VCs, I think the very first page that you want to have is a summary that practically just say, there are about 100 million people that are suffering from this particular problem A, let's put it that way.
Yep.
And my product or service is going to resolve that problem. And the market size is expected, to be approximately $1 billion from generated because of this problem. And my product, it could resolve all the problem gradually or very fast, in whichever way. And as a result of that, so there's a uniqueness to your product. I think just with that one particular sentence in the first page could immediately bring attention for the VC to really look deeper into your deck. But then again, you don't want to send like a deck that's like 20 to 30 pages. I would say for a beginning deck, maybe send like 10 to 12 pages of like relevant information just to attract people, so that you get the VC to come back to you and talk to you about it, right?
Absolutely.
I think we are already past the time, so I wanted to end our event with I always end it with a food for thought slide. And this is a food for thought for all the audience. And it's about young people in Southeast Asia showing resilience. And this very much, brings back to what Aldi was just saying, because of COVID-19, people has changed their behavior. And this is very important to tap into. This is a research performed by the World Economic Forum on more than 60,000 people in Southeast Asia. And you can see from these two charts, more people are using social media as a result of COVID-19. And then another interesting thing, which I think kind of brings back to Aldi's growing experience when you were growing up, where the unfortunate event in your family happens and that brought you to something else. And I think COVID-19 is very much the same for a lot of the Southeast Asian kids, the young people. For example, the key learnings from social distancing is about washing hands. It's about budgeting. It's about emergency savings. So you can see how behavior has changed. And I think these are really some important information for a lot of the entrepreneurs to think about. Hey, people are changing their behavior. What can I do? How does my product or service actually in the future on an ongoing basis can continue to serve these consumers? So on that basis, I wanted to say thanks again to Aldi. Thank you so much for joining and
Thanks
sharing
for
all
having
these pragmatic advices. I think that's fabulous. I love it so much. And I hope it has been very useful for all the audiences. And I see a lot of exchanges in the chat group as well. So I'm really glad that's happening. So thank you, everyone. And thank you, Aldi, for coming.
Thank you for having me, Wendy. Very much appreciated. And thank you for ICSC community. Looking forward to chat further.
Definitely. Thank you.
Thank you.
Bye-bye.
Take care. Thank you, Wendy.
Take care. Bye-bye.